Hi, this is Zach Meir with the Bulletin Board Heroes for Monday, the 13th of March. Starting off with the FTSE 100, where we're in oh dear territory, I would say. We had the breakdown of 7720, risking a move down to 7600, the old August and November resistance. Below that, we've got the risk of the 200-day moving average, currently around 7430. That would tie in with the market being in the sub-RSI 30 zone, which has traditionally been in the recent past the buying zone. So probably buy dips towards the 7430 area are currently the favoured area for this market to bounce. We did actually bounce at the 200-day line back in December, and actually I suppose we had a tester of it back in November. Doesn't necessarily mean we're going to have that stopping any falls from the SVB debacle, but at the moment probably at least a technical rebound around 74.30 as the FTSE would then be oversold. On the upside, probably end of day close back above 7600 would give you the chance of maybe a rebound up towards 7720 if you were so minded, but you can see how that broken RSI uptrend line from October really gave us the hint at the latter end of last week that the dream was over in terms of retesting the 8,000 area. On to the DAX, which has been also rather painful on the downside. It was a bit slower than the FTSE to go down, as I mentioned yesterday. This is probably the equivalent of where we were on Thursday. The FTSE, we had an island, bull trap island top, which is, let's say, one of the worst setups, but a pretty bad setup. End of day close below the 50-day moving average at 15,200, risks not only the 14,900 area that we tested, but then back down towards 14,600, which was resistance for this market back in November and December. So probably we're going for that at the moment. Worst case scenario, obviously, is that we retest the 200-day moving average at 13,800, but maybe we save that for another day. On to the Dow, where obviously we're a day behind or a morning behind at the moment. This was the real leading indicator on the downside. It never really performed as well over the turn of the year, and that failure at the 50-day moving average and RSI 50 and the end of day close on Thursday below the 200-day moving average, 32,300, really gave away the intentions of this market. Below the 31,700 level, which was basically support on Friday, we've got the risk of heading down to 31,000, which is basically resistance on the way down, and actually in October on the way up. Probably the worst at the moment we're looking for would be that old October support, late support and early resistance around 30,400, but a little bit early to say that yet, especially with the 200-day line still actually rising marginally. So that if that starts turning down, then things would be rather messy. The other point to note is that we are approaching the oversold territory, not quite there yet, but low 30s, and that might at least stem the losses initially, probably around the 31,000 level if we get to that zone. On to Bitcoin, which gave us the test of the 200-day moving average at the end of last week, which was, I suppose that was rather expected. Current situation is that we're just failing at the 50-day line, which is probably the last place we want to fail. We've failed to fill that gap there up to 23,200 as well. So it looks like a bit of a bull trap situation for earlier today. What we want to see really is an end of day close at least above that broken neckline there at around the 22,300 level. Otherwise, it looks as though we might get a retest of the 200-day line again, 19,700. End of day close above the 50-day line, probably the first sign that that Bitcoin has managed to shake off the contagion elsewhere. And you can see the RSI there just below the 50 level. So really, if you were a short-term trader, you'd be looking to sell into strength up to that 50-day line and using that as a stop loss. On to the stocks, and starting off with an unlikely riser today, perhaps Argo blockchain. Here we managed to, we've actually had a one-day island reversal. So the gap down on Thursday and then the gap higher today. That is also a bear trap feature. So in theory, that's a very strong signal, and above the old support from February around 11.75. We could head back up towards 16 pence. I suppose the most likely scenario is that we'll just fail like the like Bitcoin has, below the 50-day moving average at 14 pence and then retest the 10 pence area. But we did break that line of resistance there from February. And as we are now, this is a bullish configuration with that one-day island gap. I think it's called an abandoned baby in candlestick terms, but there we are. On to a better looking situation, and that is altitude. Here we've got we've had two unfilled gaps to the upside, one in November and then one last month. Looks like we'll head to 50 pence initially, which is a line of resistance from last September. Above 50 pence, looking for 65 pence maybe by the end of next month, although I suppose in current stock market conditions you might have to leave it or give it a bit longer. Upside value while we hold above the 50-day line at 37 pence. Stock which looks like it's coming off its lows is Ariana. We've gapped, so it's a bear trap gap reversal. The old support there, 2.6 pence. Above that, we're looking for the 200-day line at 3.2 pence. Best case scenario over the next 1 to 2 months, up to 4 pence at the top of that broadening triangle from last summer. But we've got bullish divergence there, so it looks like there's a bit of bullish dimension or sort of positive momentum there for this market, especially if we stay above 2.6 pence. Stock which I've covered quite a lot recently is BSF, and here another rise on a bad day for this market, which is obviously encouraging. We've broken above the 50-day moving average. That was at 17 pence, and above that looking for a retest of last month's resistance around 24 pence, and hopefully up to as high as 30 pence by the end of next month as a best case scenario for that stock. Moving on to Conroy, which is up for sale, and that seems to have caused a good reaction in the market. Unfilled gap to the upside off the lows, rising 50-day moving average, so we're looking really for the shares to fill the gap there up towards 21 pence over the next few weeks. Best case scenario maybe up to the 200-day line at 22 pence by the end of next month, while we stay above 15 and 3/4 pence, which should probably do it. On to a stock which hasn't been covered here for quite a while, and it's not that one actually. We'll go for Exchange XR. Here you can see that the shares have or are trying to break higher. We've broken a line of resistance there from back in January, and looking for an end of day close above the 50-day moving average at 4.5 pence. Above that we'd be looking for top of that broadening triangle from December as high as 6.5 pence by the end of next month, barring any fresh lows below 4 pence. Surprising to see GSTechnologies rise on what is obviously not a great day for tech stocks, given the SVB situation. Here we've broken above the 50-day moving average. We hit our target there at the top of that falling trend channel, 0.53 or 0.54 probably. In fact, the peak today, 0.57. End of day close above 0.57. We could be heading up to 0.7 pence by the end of next month. And the upside value certainly while we hold above the 0.48 area, which is just below today's support. HeliumOne, one of the most followed stocks on the London market, and currently brandishing a new CEO. Here it looks like we've got a nice mid-move consolidation, bull flag just below the 200-day moving average at 7 pence. Above that on an end-of-day close basis, looking for up to 8 pence, which is the top of that broadening triangle from September, and maybe we could push up to 8.25 to fill that gap down that we had back in December. Covered Kavango yesterday, and there was some good news today from the company, pushing the shares up again. We're already at Friday's high, and an end-of-day close above the 1.5 pence level should take us up towards that, well, having a chance of hitting 1.9 pence at the top of that broadening triangle from December, just filling out the lower part of that triangle just for completeness. But above 1.5, looking for 1.9, and only back below the 50-day moving average and that broken October resistance line at 1.35, really delaying the upside scenario. Decent news from Kavango today, and managed to not include it in the RNS hot list, which was obviously disappointing for some. Rebound above the rising 50-day moving average. That's normally a decent signal, and at least while we're above that 50-day line at 3.1 pence. Looking for the shares to head back towards the mid-February resistance area at 4.25 pence by the end of this month. So maybe a decent risk-reward trade. If you're cautious, you wait for the RSI to get back above 50 before deciding that it's safe to take the plunge. Moving on to Keras, which has been a brilliant mover today, and slightly kicking myself for not seeing this before. We broke above the 50-day moving average back in the end of last month. Sideways shuffle above a rising 50-day moving average, which tends to be one of the best signals around. Initial target here, 4.5 pence, which is the 200-day moving average, but I'm looking for as high as 9 pence by the end of next month, and if that happens, I would be pretty impressed by the whole charting setup that Keras has delivered. Bullish divergence there, and that sideways shuffle, really absolutely top-notch charting signals. On to Premier African, which I haven't looked at for quite a while. Here it looks as though we're bouncing off the triangle there from back in September. Bear trap rebound from below 13 pence, above that looking for at least the old September support area, up to 16 pence by the end of this month. Bullish divergence as well to back that bear trap below 13 pence that we had on. Finishing off with San Leon, and in the wake of the announcement today regarding the operatorship of OML18, we see the share still bouncing off that falling support line there as expected at 24 pence. Ideally, we stay above for 24 pence and then try and fill the gap there up towards the 28 or 29 pence area by the end of the month. This stage, only back below 24 pence really risks another retest of the low 20s for San Leon. That's it from me today. More updates tomorrow.